I'm Bill Auten of Auten Claims Management.
I'm Chantel Roberts of CMR Consulting, and welcome to the Art of Adjusting podcast.
Today, we're going to talk about life as an insurance adjuster from the perspective of property, auto, liability, or workers' compensation adjusters. Our goal is to bring interesting topics in the world of claims adjusting to people who are working as an adjuster now and to people who are considering a career as a claims adjuster. Hey, Chantel. How you doing?
Good, thanks. How are you?
Good. Today, we're going to talk about subrogation.
Yes.
A fun topic. And subrogation, so we're going to talk about definitions. We're going to talk about the steps associated with the subrogation process and what to do if you receive a subrogation demand as an adjuster, and some Q&A amongst ourselves, I guess.
Yeah, absolutely.
Sure. So let's first talk about definitions. Do you have a textbook definition of subrogation in front of you that you can read, or do you memorize it?
I absolutely memorize it. No, I didn't know that there was going to be a quiz, because the definition that I always give, in fact, we just talked about this in my risk management class yesterday. I was talking about subrogation, and I said, we talked about it last week. What does subrogation mean? And the class looks at me blankly, and I said, remember, subrogation is that fancy insurance word for reimbursement, quote unquote. So when we have a subrogation claim, that is when we step into the shoes of the insured, and we as the carrier seek reimbursement for the payments that we have made on the behalf of the at-fault party.
Yep. The textbook definition reads as follows: the substitution of one person or group by another in respect of a debt or insurance claim, accompanied by the transfer of any associated rights or duties.
Absolutely. Yep. Reimbursement.
Yeah.
And once you say that, everybody's like, oh yeah. Because if you say, stepping into the shoes of or whatever to a new adjuster, then they don't really know what that means. And neither does the insured. And excuse me, one of the things that we as adjusters need to understand, both as managers when we're explaining it to our new adjusters, and as adjusters explaining it to the insureds, is that we've got to break it down into plain English before we can start them off with the big insurance definition. And so you just say subrogation, reimbursement. I'm going to pay you, you're going to give me your rights, and then I'm going to go after the at-fault party.
That's it right there in a nutshell. All right.
Absolutely.
Good episode. We'll talk again.
Okay. Great. Shortest episode ever. So Bill, why would subrogation occur? Because it seems to me that if we are stepping in the shoes of the at-fault party should be paying, correct?
Yes. And there's a few different reasons why subrogation would exist. First of all, I think it's important for people to understand the indemnity component of an insurance policy, and that it pays on a first party basis. It pays the policyholder for damages that they've incurred, and it indemnifies them for that damage as a function of the contract of insurance. Once they're indemnified, they're basically made whole again. They don't really even have a right of recovery against the at-fault party, or they shouldn't, because if that person did, they would be paid twice for the same damage, and that's not fair.
Right.
So their rights to that recovery get subrogated to the party that indemnified them, and that's their insurance company. Why would their insurance company pay instead of the at-fault party? Sometimes the at-fault party doesn't believe it's their fault, so they won't pay. Or their insurance company doesn't believe it's their fault, so they won't pay. Or they're just notoriously difficult to deal with. and you can't find them, or they won't return phone calls or whatever.
You're
It's
talking about
not,
the insureds, not the adjusters, right?
I'm talking, actually, I'm talking about the at fault
The
party.
at-fault parties, yes, yeah.
Yeah, they're dodging you because
Mm,
they don't want to pay or whatever. Um, and in some cases, the at fault party does not have insurance coverage. So you're going to have to get that money directly from them, which can be tough sometimes, if not impossible. So that's kind of why the idea of subrogation exists, so that the policyholder, when they make a claim under their policy, they don't have to go through the trouble of chasing down the person that caused the damage to begin with. So
yeah.
that's one scenario. Another scenario that I don't like, but I see it sometimes, is when a third party liability claim happens, and um, the liability carrier will pay damages on behalf of their insured, even though it was somebody else's fault. Now that's kind of a weird scenario, and like I said, I don't like it when a carrier does that, because why would you accept liability if there's no liability, right? Why would you pay that claim? Um, Sometimes you may be contractually obligated to pay that claim. So if a builder hires a subcontractor, for example, and that subcontractor damages someone else's property, the general contractor might be held legally responsible, but it was actually the sub's fault. So the general contractor may be obligated to actually pay those third party damages and then go back after the subcontractor to collect on them. So I've seen those scenarios, but in
That's a complicated scenario
it
too,
is,
where you've
yeah.
got multiple, I would say, layers of contracts.
Yes, you not only have to deal with the insurance contract, but you also have to deal with the general contractor and his customer, and then the subcontractor and the general contractor's agreement and how they work together. Um, so yeah, it is complicated, but subrogation exists in those scenarios as well.
One of the things that you mentioned that I do want to point out, and again, this is for perhaps our younger adjusters or our newer adjusters who have not or maybe don't know all of the insurance lingo yet, is you used the word indemnify and indemnification. Again, when I'm talking to my risk management students, because they're brand spanking new into the insurance world, I say indemnification is, again, that fancy insurance word for payment. Subrogation is the fancy insurance word for reimbursement. Indemnification or indemnify is that fancy insurance word for payment. So I just
Right.
wanted to make sure that we knew that as well.
Yep. And another interesting thing that can happen. Well, back to the word indemnity. That's used throughout contracts as well,
Mm.
in lease agreements, maintenance contracts, construction contracts. There are also hold harmless provisions, which can be complicated, but basically have the effect of um, creating an environment where that main contract entity, let's say it's a general contractor, has a contract with the subcontractor, and the hold harmless agreement will make sure that if something is damaged by the subcontractor, that the general contractor won't be held liable for that. Another interesting provision that you see in contracts a lot is a waiver of subrogation, and you can actually purchase an endorsement that will guarantee that your insurance company will not subrogate if you have a claim. Why would you do that, right? Well, I see it most often in construction contracts, sometimes in leases. But what it is a guarantee that um, that one party's insurance company won't come after the at fault party.
Yeah.
Um, I don't I don't think I would ever agree to that. I don't think I'd ever want to sign a contract like that, but
But
I've seen
again, those
some.
are going to be some of our, excuse me, more complex, I think, claims.
Yeah.
And like you said, it is a lot in the maybe builder's risk or construction kind, and just sticking to the plain old, the insurance company, the at fault party won't, uh, pay my claim or
Right.
what, won't accept liability. Something to tell the insureds, like if we're the adjuster and it's the first party insured, is, you can always file with us and we can seek reimbursement. And the benefit to you is that your claim is paid. Your property, you've got money to fix your property, you've got money to fix your car. If you have rental insurance, we can get you in a rental car or something like that. The problem will be is if the insured, for example, with cars doesn't have rental coverage or whatever, and so they're out of that pocket. But I do want to point out that when adjusters are talking to their insureds, they are not allowed to say, I am not turning in a claim. And I guess this is for agents too, if agents are listening. You are not allowed, according to the Unfair Trade Practices Act in your states, to say, well, so and so's at fault, then I'm not going to turn in a claim. You can't force your insured to go to the at fault party. You
Right.
know, um, even if someone else is at fault. And I've got a great example right now is that my neighbor, bless her heart, is having all sorts of difficulty with her insurance company. And she was talking to me about it. And one of the things, and I have no idea why this roofer did it. She hired a roofer, and this roofer brought all the shingles over to fix the roof, put the shingles on top of the roof, and then left because the homeowner, my neighbor, was on vacation for a week and didn't bother to take the shingles off or whatever. It rained. So now there's some kind of, I guess, structural issue or whatever, because you had all this weight of the shingles on the roof. And so now there's even bigger cracks or whatever. There's interior water damage. And her insurance company, her carrier says, we are not going to file a claim. You need to file with the roofer. And I'm like,
Hmm.
well, this is technically true, but you can file with your homeowners. It is going to be another claim. So you are going to owe another deductible in addition to the deductible that you're paying for this particular loss that the roofer was supposed to be fixing in the first place instead of making worse.
Hmm.
But that insurance company has to take that claim. You pay your deductible, and then they can go seek reimbursement or subrogation from the at fault party, which would be that roofer who she fired.
Yeah. Yeah.
By the way.
That's interesting. I can see a scenario where, and I don't want to bad talk agents here, but I can see a scenario where an agent would talk a policyholder out of making a claim like that because the agent doesn't want to see a claim history on that. The carrier, though, I would be very surprised if the carrier, someone at the insurance company, would actually say, "Look, we're not going to open a claim. You need to go after the responsible." That sounds unusual to me.
Again, it comes down to education.
Yeah.
And I am attending this training class for insurance trainers right now. And it's filled with trainers, of course. And I was talking about my experience about how adjusters are no longer being trained. They're not
Yep.
being sent to class. They're not being sent to seminars. They're not being told to listen to webinars. If they are doing any kind of education, it's all on their own. And who has time?
Right.
I mean, we try
It's
to
a
keep
stressful
our
job as it is. You want to take
e-
it home and take a stack of books home every night, do homework?
exactly. And I mean, we try to keep our podcast, down to 30 minutes, an hour, somewhere like that. So you can at least listen to us while you're torturing yourselves on the treadmill or something like that,
Right, right.
Um, but the point is that a lot of these people don't know. And whose fault is that? That's going to be, in my personal opinion, the people in the ivory tower. However, all of that being said and done, the very next question, and you bring it up, and you're absolutely correct. The very next question that always comes up to me as an adjuster when I was telling the insured this was, is this going to make my rates go up?
Right.
And, I always had to say, look, I'm not your agent. I don't know how your premiums are determined. Of course I do, but I can't speak to that. It's outside my sandbox. But call your agent, ask them. But it seems to me that it would not, because we would get paid as the carrier. And so it should equal out, balance out zero. You know what I mean?
Mhm.
Um, so, but again, I can't say that for certain. And before we move on, I do want to mention one more thing, because you had mentioned you can see how the agent wouldn't want to turn something in because of the loss history on the agent's, you know, book of business or whatever. For the adjusters who do not know, the agents can get commissions if they have, like, well, they're always going to get commissions, I guess I should say, or they will get commissions regardless, but they'll get a bigger commission if they don't have a loss history.
Right.
But one thing, if agents are listening, again, I want to forewarn you, if you are an agent, you are an agent of the carrier, and therefore your knowledge of the accident is the carrier's knowledge of the accident, even if you did not tell the carrier, which means that our clock starts ticking in regards to proper investigation, prompt payment, uh, prompt determination of coverage and liability, these sorts of things. Now, if you are a broker, you are a representative of the insured. And so if the insured calls you as a broker, then they're basically legally, quote unquote, reporting it to themselves.
Right.
So this is a very important thing to talk about. I discuss it in my CPCU classes as well, that CPCU tends to think of agents as solely being that person who sells insurance, but adjusters could be agents, meaning representatives as well. So this is a very important concept that we're getting into.
Yep. Yes, and the dynamic between an agent and a broker, if you're a young adjuster, it's important to learn that quickly, because you will often find that brokers step into the claims process as an advocate. And sometimes that can be a little, it can upset the apple cart a little bit. They can sometimes put pressure on an adjuster, and that,
Yeah,
that's all designed to help their policyholder. It's not to make your life miserable. So you do have to recognize that if you're getting some heat from a broker, you got to remember that they're representing the policyholder, and that's why you're getting that heat.
exactly.
Um,
So we've kind of slightly veered off course, but I'm going to mention this because we're talking about agents and adjusters. But on Thursday, December 7th, our podcast will drop, where we are going to be talking about the interplay between, I guess we should say, really, like, producers, because producers encompasses agents and brokers
yep.
and adjusters. So stay tuned for that episode, because
Yes.
it is something that you will not want to miss. But going back to our fun subrogation thing, uh, so we've gotten this claim in that obviously our insured is not at fault. Someone else is at fault. We're taking it. We, as the adjusters, are doing the investigation. What do you think the next step is, Bill?
The next step in a first party claim,
Mm.
and so you're the adjuster, you settle the claim with the policyholder. Your investigation should have by then showed how the thing happened and presumably who was at fault for it. And you've worked out coverage and all that. Your next step is to go and actually notify that at fault party that you're going to be making this claim and that they should notify their insurance company as soon as possible.
Yeah. I would even say during our investigation, like if we know, for example, um, let's take a slightly more complicated one of maybe a product's liability rather than just a rear end car accident or something to that effect. Um, Whereas perhaps a heater, since we're in winter, um, is something that caught fire. And so we've sent out a cause and origin person, and we find out that it was an electric space heater, or we think it's an electric space heater that has caused this damage. And so we get the make and model of it, and we would then go to that manufacturer and say, hey, we think you're at fault. And I mean, this is days into the claim, not
Yes.
weeks,
Yep.
not when we're getting ready to settle, because the issue is going to be if we need to do some destructive testing on the thing, the item that we think is at fault, for example, we have to preserve that piece of evidence for the at fault party to look at. And if we don't, they can claim spoliation of evidence.
Yep.
And that's a very important concept for people to know about in subrogation claims, where we have destroyed the evidence. In car accidents, for example, you would have to give the other party a chance to look at your insured's car, just like you want a chance to look at their person's car. So in this particular instance, you would say, hey, my engineer has the space heater. You have until X date, whatever date that is, and don't give them like 3 business days. I mean, come on, guys. I usually would give 2 weeks, um, something like that. And, like 10 business days, which is 2 weeks, for them to send their own person in, their own estimator, their own inspector, their own cause and origin person. Same thing with the scene. Yeah, because we've got to preserve that scene. Now, it might be harder to preserve a house because it's burned down and now the elements are in there or whatever, but we need to get them out there ASAP, so that they can look at everything and they cannot claim spoliation of evidence, which in turns ruins our subrogation, or might ruin, I guess I should say, our subrogation demand.
Yeah, it will it can make the claim more challenging if the evidence is gone. And your example is a great one. And I would actually find out who maybe had worked on that furnace in the past several months or year, who installed it. And sometimes we wind up placing several companies and entities on notice, and you'll get a crowd of adjusters and experts descending on the scene, and there'll be 14 people standing around trading business cards.
Yes.
And
Yes.
around here, they're always kind of the same old faces. So we get to
Yeah.
know our experts in the region, and every once in a while, someone will fly in from another state or
Mhm.
even Canada sometimes, and that'll be a new face.
Yeah.
But those can be entertaining.
But too, what you're looking at as well is, and you mentioned this great point, is you got to start thinking as the adjuster of everybody who may be involved in that particular claim. For example, I happen to work as an expert for an improper death with a bicyclist. A car hit him, and I immediately asked, was he wearing a helmet, and has our insurance carrier place the helmet manufacturer on notice, because a helmet is supposed to pretty much help you stay alive if you fall off your bike.
Right.
And in this particular instance, it didn't, but that's neither here nor there. In the fire instance, you're looking at who built it, the electrician, I mean, everybody, invite everybody to the dance
Yep.
is what
And
we're
they
saying.
can, and if they're not liable, they'll tell you, and they'll tell you why.
Yes.
And you can, believe that or not. If your expert is contrary to their expert, which is usually the case, then you have to be able to make the case that they're wrong. And sometimes that goes into litigation. So
Absolutely. Yeah. And so before we get there, when so right now we've just gotten to the point to where we think that so and so is at fault. We're ready to pay our claim. We would pay the claim less the insured's deductible. Then we write up what's called a subrogation package. Now, I know a lot of big carriers have a quote subrogation department, or may use a particular law firm who is particularly well known to do
a lot of
nothing.
TPAs do it now too.
Yeah, who do nothing but subrogation. I always wanted my adjusters to do subrogation themselves because they knew the claim the best, regardless of what your company does, even if it is shipping it off to another department or another company, you as the adjuster would put together basically a demand package. And that's either highlighting by ticking off all of the documents in your claim file, being the expert witness report, the police report, the fire report, whatever kind of report that you have, photographs, the estimate, a copy of the check that you've just issued to the insured, and then make a demand for that amount, $13,500.11 or whatever it is, for the damage for that check that you've cut. And I always had my adjusters make a demand for the insured's deductible. And then I would ask that, this estimate amount come to me and you put, ABC insurer as subrogee for Mr. Insured, Mrs. Insured, whatever. And then send that deductible check directly to Mr. and Mrs. Insured. Here's their address. And then
Mhm.
follow up, in about a month or so and say, hey, Mr. Insured, Mrs. Insured, have you gotten your, deductible check? No, you haven't. I haven't gotten my check either. I'm going to call the at-fault adjuster, see what's going on. Why haven't you paid my
Right.
claim? Yada, yada, yada.
Right.
Um, and we go from there. I'm sure you have something to say to in response to that, but I do want to point out real quick the whole idea, and you mentioned it earlier, made whole. And
Mhm.
then I know you want to talk, and then I thought we'd talk about the made whole idea.
Yeah, well, that's kind of what I wanted to talk about.
Oh, okay. We
um,
can read each other's minds. It's
I
scary.
guess so.
Gosh.
So the funny thing about first party coverages is that it allows for replacement cost. But when you subrogate, you're actually making a tort claim kind of, and you're only going to be owed actual cash value. So if you cut a check for, like you say, $13,000, but that was the replacement cost repair, you may only be eligible to recover the actual cash value, which might be 7,000, 10,000, whatever the depreciated amount is all you're going to be able to recover. So that's an important concept. You don't see that concept too much in action in auto liability, because those policies generally don't pay replacement costs for automobiles. When you have a collision claim on your own policy, it's going to pay you the actual cash value of the repair itself. or the replacement of a like kind and quality, vehicle. But on the homeowner side, you do get reimbursed for replacement costs once you've made the actual repairs. But that carrier can't subrogate for that portion of the claim. So we see a lot of claims that come through here for self-insured entities that get subrogated against by other parties. And most often those subro packages have replacement cost numbers. So a very quick and easy thing for us to do is to convert that to actual cash value. And there's other audit things that we can do to review those claims. But that's an important consideration if you're a new adjuster to think about on the homeowners or commercial property side.
And there is something too. You mentioned ACV and RCV for actual cash value versus replacement cost value, but there's also something to be thinking about in regards to coverage. It might be that the at-fault party is liable for, X amount of damage or whatever, but our policy as the at-fault, or excuse me, as the primary insurance, as the insured's insurance carrier, does not have coverage for it. So we
Right.
cannot pay for it. And therefore, there would be something that, like I mentioned, rental, for example, maybe the insured doesn't have rental car coverage in their automobile policy. So we can't give that to them if we're, handling the subrogation claim or the main collision claim, but the at-fault carrier would. And so that's
Yeah.
another aspect of that claim that we as the adjuster should be putting forward, that you need to pay this amount to the insured, our insured, well, you pay this amount to us. And the idea, like you were talking about, of made whole differs in every state. And to give myself a plug, if you go to theartofadjusting.com to resources, there is a drop down box and you can go there and get a lot of information, but there is a list of states for what is made whole. I think it's somewhat current, but I think it's 2022, 2021, late 2021, early 2022 when I did it last. So it should be pretty current. However, I would always say talk with coverage counsel if you have any questions.
Yeah, the policy has to function the way it normally does, even when there's a very obvious subrogation opportunity and a very generous third party that is willing to pay that subrogation claim. But there are certain circumstances where your own policy can't reimburse you for everything that you've lost because there are some limitations to the policy. Cash is one example. There's special limits of liability for jewelry. Different types of things have special limits. That doesn't mean that you're not able to go after that negligent third party. It just means that your insurance company is only going to pay you up to the limits of their policy, and then go after the third party for whatever they paid out. I have a scenario where delivery van struck a building, pushed it off its foundation, rendered the building basically a total loss. The insurance coverage on the building was an actual cash value policy, and the amount of the actual cash value repair exceeded the policy. So it was a policy limits case. The insurance company paid the policyholder the limit and then subrogated against the carrier for the truck. But Mr. Insured had to also pursue that trucking company and their insurance company to pay the difference between what his policy paid and the remaining actual cash value. So, and I assisted a little bit in that, in just furnishing my estimate and explaining this process to the insured so that they knew what to do. And I think in the end, he wound up pursuing the claim himself without the assistance of an attorney. I kind of recommended that he probably might want to have an attorney to help him through the process, but I think he managed it on his own and lived happily ever after, I think. So,
Yes, and that brings up again a very good point that as new adjusters, you cannot overpay. You do have to pay what the policy says. I always again encouraged my adjusters because every 30-ish days or whatever the Department of Insurance says, we've got to keep in regular contact with the insured as to why the claim is still open, what we're doing with it, blah blah blah. Uh, I always copied the insured on the subrogation demands so that they knew that I was asking for this particular amount of money. And then I would go on and talk about or send letters to the insured saying, still haven't gotten the funds yet. Let me know if you've gotten funds, blah, blah, blah. I'm going to continue to, work on it. And we're going to talk about it, what happens in just a second about if you disagree with each other about, the at fault parties, carriers just adamant that they're not at fault and we're adamant that they are at fault. And then what happens then? But I thought before we did that, we would do what happens if the insurance adjuster gets the demand package? Like our insured is at fault. What do we do then?
that's my world.
Uh-huh.
So it's handled like any other third party claim. They'll usually contact their agent, and their agent, if they are forthright, will send that to the carrier, and that will become, part of the loss notice. The information in that letter will be used to fill out a loss notice, a general liability loss notice, or auto, whatever. And then the handling adjuster will conduct an investigation into what happened. Hopefully, they'll be able to evaluate the damages. One of the bad things that happens with subro cases in many cases is that the claim is settled, wrapped up, and then the subro package comes in. And that can make it difficult because sometimes the damage is repaired and you kind of rely on photographs, and you do get into spoliation issues there. We have a really big case where there was a lot of inventory lost, and the inventory was processed by an outside, accounting firm and public adjuster, and then disposed of. So they made a very detailed spreadsheet of everything, and they had invoices to back all of these items up somewhere, but they didn't give it to us, and they only gave us the spreadsheet. So I argued with the attorney that was defending this, that if they don't have this evidence, that's a spoliation issue, and I think you should raise that as a defense. And I think they're still arguing about that one. So
Yeah. Yeah. And it can't be a defense, because how do we know that we're at fault if we didn't see the product?
right.
F- with the heater, the space heater that catches on fire in our, mythical claim and everything. If we are the carrier for the manufacturer, how do we know it wasn't the electric that didn't? How do we know that it's actually us?
Right.
And I think you did a absolutely great job. And we've already talked about, if the first notice of a claim is a demand package, basically the whole claim has been settled, and the other carriers presenting it to you on a platter saying, here's all of our documentation, go ahead and cut that check. You do have to start months later, a year later, whatever, and still do your investigation, which means contacting the insured, getting recorded statements, getting whatever photographs you may have. And that
The
sort of,
passage of time does not always ruin your chances for thorough investigation, but the likelihood that people's memories will fade, or that the physical characteristics of what was there have changed. And so the passage of time can absolutely be an enemy, but not always. And even if there is, so I had a claim where a house was completely demolished, and it was gone. And we had to evaluate the claim for the replacement of that house, but all that was there was a lot. It was just a yard. The basement was filled in. There was grass growing where the house was. But the internet's a great thing. You know, you can go
Yep.
Google Street View. I was able to get photographs from a real estate website of pretty much every room in the house, and that went pretty far to be able to, recreate what was there. So if you're resourceful, and if you embark on this journey as an adjuster, you better be resourceful. You can find ways to adjust that claim. Some would argue, well, it's not your job. Make them provide that stuff to you. You could do it that way, I guess, too. But at the end of the day, you want to be fair. And if the evidence is available, your job is to find it and evaluate the claim and its merits.
It is true that it is the claimant's job to present the claim to the carrier. And some would say even the insured's job to present their claim to the carrier. The issue is that as an adjuster, you do have superior knowledge, and you should be trying to make that effort. It is sometimes easier for you to get things than the insured, because the insured is a layperson and doesn't know. So I understand that the adjuster may be overworked and underpaid for the amount of yelling that we get, but again, if you spend that like 15 minutes up on the front end of the claim, you save a lot of time, 3 or 4 hours on the back end trying to answer emails or play catch up or whatever.
Well, take that example I just gave about the house that was gone. Nobody was denying liability in that one. Okay, so we all knew what happened. We all knew it was the policyholder's fault. But there was just the question of how to evaluate this damage, because the building was gone. We did have an adjuster's estimate and photographs of the scene, but still it wasn't really thorough enough. So rather than just sit back and say, you know what, there's not enough here, so your claim is denied. Well, what you do there is you send it to litigation. And now you're paying attorneys to do the same thing that you could have done as an adjuster, and saved the company a lot of money and a lot of time by fairly assessing that loss and adjusting where necessary, or verifying that the claim actually is legit and it should be paid at the cost that they've presented to you.
So you bring up an excellent point, that what if we had a claim where we didn't accept full liability, such as in your case. You could have said, hey, you didn't prove up all of your claims, so we're going to accept 75% liability or whatever. And that goes back to the whole made whole issue, where the insured would need to be paid to be made whole before the insurance company can receive full reimbursement for the amounts that they've paid. So basically the thought is that the insurance company is going to take the hit, but the insured, the policyholder themselves, are going to be made 100% whole. Again, it depends on what states you're in, but you're absolutely right.
So the phrase that comes to mind, or the word that comes to mind here, is horse trading. And there is some negotiation that can happen within a subro case. And it may mean that they've presented their package. There's some evidence missing because of the passage of time or whatever. And, you're going to negotiate based on liability or damages. If you're not making an argument about liability, but you're instead arguing that the proof of the damages is insufficient, you can then engage in some negotiation tactics that would say, look, you're asking for 150,000. We don't really see enough proof here because something is missing that nobody can reproduce. So we're going to give you the benefit of the doubt, but we're going to reduce this claim down to 130,000 based on the fact that there's some questions to be answered here.
Yeah.
The other side can take it or leave it.
Or they can go to arbitration.
They can go to
Because you had
arbitration.
mentioned you had mentioned litigation. You know, we could all file suit, but there is something, and of course, the Lloyd's or a lot of the excess and surplus markets don't deal with this, but there is for the domestic carriers intercompany arbitration, which is a much cheaper way. And usually it's binding, which means that once the decision is made, it's made. Everybody has agreed to live and die by this decision before we know what the decision is. So intercompany arbitration is a great way to resolve our differences.
Yep. And not all carriers are signatories. I have 20 carriers on my client list that are not. And they will sometimes be asked to sign the agreement to arbitrate that particular claim. Sometimes they will, sometimes they won't. Litigation isn't the only way out of this, though. There's also, various forms of ADR, or alternative dispute resolution. That would include mediation, where you assign a mediator who can act as a go-between between the parties and help to manage the negotiated settlement of a disputed claim. So if you're, as I said, you could argue on damages or you can argue on liability. And you can say, look, this was partially our fault because of X, Y, and Z, but it was also kind of your guys' fault for this reason as well. So we're going to accept 60% of liability here, not the full 100%. And we're going to reduce the claim accordingly. So
exactly. Yeah, so I think we've kind of beaten this to death. And if y'all are hearing the dog bark in the background, it's because I have not given him the peanut butter bone yet.
Oh no.
So yeah. So he is quite upset. We're going to have to wrap it up with maybe some question and answers, maybe a positive story or two from us of what we've done with subrogation.
A lot of fires. A lot of times we've had some appliance related fires, and the installer, we had a claim where there was an installer brought in. He was our policyholder. We brought the manufacturer in, and of course the manufacturer's expert said it was the installer. The installer said it was the manufacturer. We held our ground. Actually, it wasn't an installer, it was a repair person. And the part, it was interesting because they got the machine in the lab. Everybody was there with their cameras and forceps and took the whole thing apart very carefully. And they found one component that appeared to have been compromised due to some vibrations. And they said, well, that happened because your guy cut all of the plastic ties that held these wires together. And I talked to our guy and he said, no, I don't cut those wires. I don't cut those ties. But watch, here's how I do it. And he showed me how he did it. And what they were saying is completely contrary to what the guy actually did. So we had to, we actually took a video of him making a repair on our expert was able to find a matching dryer, brand new. They disassembled it and they had our guy take the whole thing apart, put it all back together and videotape it to show that he did not actually mess with those components. And that was an interesting case. But sometimes you have to go to great lengths. They had to go buy a dryer just to take it apart for this evidence. And the evidence of the dryer, a shout out to my friends up at FRT in Sodus, New York. They have a lab up there and a storage facility. They have all kinds of stuff stored in that building: lawnmowers, trucks, big fuel tanks, appliances, you name it.
That
And
isn't, I'm sorry, go ahead, finish.
And that is important because you want to retain that stuff until the claim is resolved.
Yes,
The
that was
problem
my
with that,
question.
yeah, the problem with that is they charge rent to keep it in there. So you do incur that expense. So it's not right for all claims. You know, if you had a $1,500 claim, it might not be worth, storing a dryer for a year in a storage facility, but
Yeah, that was my next claim because I think new adjusters are kind of caught off guard about that. I know that I was. I thought, well, why am I paying the expert $150 a month to put this black box or whatever it happened to be in his closet?
yeah,
Um, and so that is something that we need to make sure. And you hit the nail right on the head when you said we have to keep it until the claim is over.
yeah,
And if that's all the way through litigation 7 years from now, then that's all the way through litigation 7 years from now. And it's part of the adjusting expenses. It's not in the indemnity cost or anything like that.
correct.
Also, my one story that I will point out to everybody is, and then we can do our wrap ups or whatever. When we're talking about black boxes, for example, in semi tractor trailer rigs or cars or whatever, a lot of those boxes have to be recharged every 6 months or whatever. Basically they have to be turned on,
Yeah,
or something to that effect. And if the expert does not do that, the like internal battery dies and all of that data is wiped.
hmm,
And then you yourself have spoliated that evidence. Uh,
yeah,
because, you may want to bring it up in court, and show the jury, here it is.
right.
This is the readout or whatever. And you do not want to have that happen to you. So anyway,
So
I think this is an excellent topic for everybody to know. It's an important topic because a lot of times claims departments are seen as the space where money goes out of, and or they're trying to be a profit center, and that's a whole different kettle of fish, whole different podcast. But this is a way for adjusters and the claims department to keep the loss adjustment expenses down so that our cost of insurance stays down. We're not just paying everything, every demand that comes to us. This is part of the adjusting aspect of being a claims adjuster.
yeah, subrogation functions to mitigate the amount of losses that a carrier experiences over the year. And if you don't do a good job on the subro and collect those dollars that might be owed, then you're not doing anybody a favor at your own company. You're
Right.
helping out the party that caused the damage for sure, but definitely make subrogation a caption in every report and make sure that you address it with your supervisor whenever you have a claim.
And be thinking about it early and often.
Mhm.
Early and often. Early and
Yep.
often. Yep. All right. Well, Bill, I think we've put this one to bed.
Yeah, I think so. We covered it all. So,
Yeah. Next week, or I'm sorry, next episode, it's gonna be Thanksgiving, if you can believe that.
oh my gosh.
Yeah, I thought
Yikes.
we would talk about um gratitude and
Yeah.
being thankful and how that can actually have a positive mental impact on adjusters. How
That's
it can
great. Yeah,
be.
mental health with this profession, I think, is an important topic. So yeah, I'm looking forward to that one.
Me too. Me too. Well, we'll see you then.
All right, take care.
Bye.
Thanks for joining us on the Art of Adjusting podcast, where we talk about life as an insurance adjuster.
If you enjoyed this podcast or this episode, please give us 5 stars and a review. It does help the algorithm pick us up.
Hit that subscribe button real quick and tell all of your adjuster friends to check this out as well. For independent adjusting services, go to www.autin.claims. And for anyone interested in working as an independent liability adjuster, Go to the Contact Us tab to join our roster.
In the meantime, you can contact me at theartofadjusting.com for consulting and training purposes.